Your Worship, on the question of regressivity, one way you can measure it is you can look at the relationship of typical property values versus household incomes. We have that type of information in our community profiles report. If you look at that relationship, you'll notice that higher household incomes spend less of their money on housing than do lower households with lower income.
All right.
That in itself is an indication of regressivity. Lower income households are spending a greater portion of their money on their housing component than our higher valued households. Introducing a base tax has a bigger impact on lower valued properties. So it's a shift, or has a greater impact on lower valued properties, thereby increasing regressivity. It's tough to explain without a graph.
Okay, I was just interested in where the source was, because under that scenario, then that would mean that the person in the least expensive home in the city would have the lowest income, and the person with the most expensive home would have the highest income.
No, it's the relationship of what they make relative to what they pay for housing. Higher household incomes will pay less for housing on a percentage basis than will lower household income families.
Okay. I just, under the philosophy, though, that it says that you would have to have, the lower your income, the lower your home is worth.
Yes, they are. Yeah, yeah. Lower income houses will have lower income households will be associated with lower income properties. Higher income households will be associated with higher income households will be associated with higher valued properties, but the relationship of the household income to property value is different on one end of the spectrum relative to the other.
Okay.
They don't spend equal amounts out of their budget on their house, on their housing component.
Okay.